Hi there, and welcome to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm talking with JP Lee, Product Manager at VanEck, as well as Angus Shillington, Emerging Markets Equity Research Analyst at VanEck. So, Angus, the election results in India were quite the surprise, but in the end, Modi remains Prime Minister. Do you think anything fundamentally has changed when it comes to India's economic outlook?
I mean, the short answer is not really. I think this was a huge victory for democracy. And I think one of the problems India's had with investors overseas is this idea that it was somehow super inefficient, very corrupt. This was a democracy functioning in full force, right? There's a very clear message here that Modi needs to make this thing more even, right? It's not equitable. And I think the other clear message is he needs to kind of lose the crazy stuff. That sets him up, I think, to have a successful third term if he listens.
So, Angus, there was a big sell-off in India ETFs when it became clear that the BJP was going to underperform the lofty expectations that many people had for them. A lot of the India funds I saw fell 6, 7, 8% the day after that became evident. But then they recovered almost all of those losses in a couple of days. Do you think we're going to see more volatility going forward, or are we back on that uptrend that India ETFs were on prior to the elections?
I mean, the volatility, I come from a volatility background. You pull all the buyers and you only have sellers. It doesn't matter how many there are, you're going down. And the reverse is obviously true. So I think that was what happened, because there was a lot of confusion. Coming into whatever it was the Sunday night, you heard the exit polls, which said massive win up, and then you heard not a massive win, in fact, not even a win at all, down, right? So I think that was a sort of just a bids pulled, offers pulled situation. India's mathematically, and sort of if you look at this through basic investment principles, I mean, I think India obeys the basic rules of investing, and I think this is one of the most misunderstood points, is businesses compound value, the economy grows on a long-term structural trend, and there are a set of reforms. There's digitization, and the demographics together create something that I don't think we've seen before at this scale. So, and the sort of the last point on that is one that we get a lot of pushback on, is this sort of idea that, in essence, right, it's not developed enough, right, or it's too poor, right? But think about it. It's like, invert that proposition. It's not about being too poor. What is the baseline, and what's the possibility of getting to a higher level, right? If your baseline is super low and the opportunity set is super high because it's the deepest pool of inefficiency, I think you've got a pretty good outcome. So I don't know, the rest of this year, difficult to say, because I think there's going to be some turn in terms of companies that went up into the election and companies that didn't do so well into the election. So I think there might be a rebalancing. So maybe you get a sort of, again, I'm not prepared to make that statement, but over time, I think it's a fairly simple story that will return comfortably to investors.
But what do you think about this idea, Angus, that Modi's win wasn't as decisive as a lot of people thought? So given that he's kind of the business-friendly politician, or at least perceived to be the business-friendly politician, that's not good for him, and that's not good for India's economy. Would you push back against that?
Yeah, very much. I think you've got to look at it that he overplayed his hand, right? He, went out there saying, I'm going to get 400, or my target's 400. He was kind of sloppy with messaging. I think he did not pay attention to political hierarchy and infrastructure, and all of those things kind of backfired him. So I think, like we see in the US, that a gridlocked government tends to yield good results. Now, what are his options going forward? And if you think that growth is his main lever of governance, I think just squeezing the juice out of the fruit that he's already ripened will keep him super busy for 5 years, and I think will keep the economy super growing for 5 years. So I think it's net pretty good outcome. Not the one I would have predicted, but it makes total logical sense.
Yeah, that does make sense. JP, I want to turn to you now. VanEck has a couple India ETFs on the market today. One is a GLIN and the other is DGIN. Those are the ticker symbols. Can you tell us about those? What's the difference between these ETFs and broader India ETFs that are on the market?
Sure. So again, we have two VanEck ETFs that provide targeted access to India. The first is GLIN, the VanEck India Growth Leaders ETF. This is an ETF that uses a GARP strategy to look for companies that are exhibiting sound growth characteristics while keeping valuations in mind. So this is not specifically targeted to any one sector. It can move anywhere within the broad economy. And I would consider this kind of, if you're thinking about India, this is a way to dip your toes in the water, especially with a lot of the valuation concerns that our investors have. The second is DGIN, the VanEck Digital India ETF. This is providing targeted access to stocks that are benefiting from and participating in India's tech revolution. So this is very specific. It's not just IT companies. It's any companies that the index provider deems to be participating or involved in a lot of the exciting things that are happening in India, specific to tech, consumer tech, and things like that. So Glenn, very broad. If you're saying, I like India and I want to see how I want to play India, I want to get involved, but I'm not sure how to do it. Glenn is kind of a replacement for your broad benchmark index. DGen is a very specific and targeted thematic play that's specific to India. So that's how I would kind of categorize our two ETFs.
That's great. And I'm glad you touched on valuations, JP, because a lot of people, when they think about India, they like the story, but they're worried about high valuations. Are high valuations a concern, when it comes to investing in India broadly? Do you have to worry about that and gravitate towards something like GLIN?
Well, I'm gonna partially answer that, and then I'm gonna give it over to Angus. So some investors are very, valuation sensitive. Something's over XPE. I don't want to get involved. I missed the run. I'm not going to get involved. Right. So Glenn is valuation sensitive in the fact that it's going to be pulling out the names that have kind of exceeded their range or exceeded what, according to the index provider scores, the range should be for that stock. So if you're worried about valuations in India, take a look at Glenn. Now, as to the broader macro story, I think Angus has a lot of interesting things to say about valuations in India. So go for it, Angus.
Totally. I mean, just to that Glenn point, I think JP said it perfectly. It's like, we're not here to make somebody do something they don't want to do. Now, if you are uncomfortable with India, this is a really interesting gateway into it. Lower valuations, repeatable, turns around in a way that appears to add value. So I think it's a good place to certainly start, right? Because it's typically you've got to own to understand at a sort of investor level. So I made that point, but look at 25 years of valuations in India, call that price discovery. The Indian stock market has outperformed the S&P, right, over that period, and the valuations are roughly the same. So then you ask your question, why? The answer is because that performance has been generated by businesses, right, that throw out shareholder returns, right? Shareholder returns that compound over time. So again, obeying basic rules of fundamentally investing. So the question then is, what's the right level, right? So as I say, we think that this plays out. If the performance in the past has been like the US, it plays out sort of like the US, but maybe in fast forward. That's good growth, good quality, and probably demands a US level valuation. And I think people get very sort of tangled up with, why is India more expensive than China? And I think there's a very, very simple answer, which I'll let everyone else figure out, but it's kind of obvious.
Well said. So we're going to have to leave it there. A ton of great information. JP, Angus, it's been a pleasure having you both on the show. Thanks so much for your time.
Have a great day. Thanks a lot.